Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Greetings, everybody. Welcome to the show this week. You are listening to Saving with Silverman because making smarter choices about your money impacts the quality of your life. We thank you so much for listening to the show as always and joining us and serving our listening audience right here in Tucson and Southern Arizona is the one and only Mr. Mark Silverman of Silverman & Associates. Welcome, Mark. How are you, sir?
I'm doing good, Mark. How have you been?
I'm doing fantastic. Glad to be back on the airwaves with you after a week or two off. I appreciated the break, but glad to be here.
I'm happy to be here as always as well.
I know it's a good time. I like chatting with you. We always have a good conversation and work our way through some interesting topics when it comes to finance and retirement, which isn't always the sexiest topic in the world, but I think we do a pretty good job making it easy to digest and understand. And so if you'd like to get some help from Mark and talk about your specific financial situation, well, he's a great resource here in the Tucson, Southern Arizona area to tap into, and you can do so by calling or texting 520-333-7601. That's 520-333-7601. Mark is a certified financial planner professional, been doing this a very long time, and certainly, as I said, a great resource for you here in the area. He's the president of Silverman & Associates, and you can also stop by his website, and there's some great tools, resources, and more information there that you could go and check out as well, and that is savingwithsilverman.com. Again, savingwithsilverman.com. So, Mark, let's talk about conventional wisdoms today. I know, you're a pretty educated guy. You spend a lot of your time learning. You're always taking extra classes. You do the extra work for the CFP and all these kinds of things. And sometimes conventional wisdoms, they get a little outdated. Maybe they're not always so wise. So let's talk about a few of these that could lead us astray in the conventional wisdom department, okay?
That sounds fine to me.
All right, so real estate. Always heard that you can't go wrong with real estate. That's a good old conventional wisdom. What do you say?
You know, it really depends. You can go wrong with real estate because I've had clients that have done well with real estate, and I've also had clients that haven't done so well with real estate. So I think it comes down to knowing what you're doing. If you're going to be spending time, if you're doing like rental properties, that sort of thing. Are you going to be managing the properties yourself? Are you going to be using a property management company? That can have a big impact. Are you going to have a mortgage on the property or not? So there's lots that are involved. Are you kind of be hands-on? The clients that I've seen that have done it well have been more hands-on. The ones that are hands-off haven't fared as well. And so, there's other ways to do real estate investment trusts. There's different kinds that you could have. There's non-traded and traded, so I'd be careful what you look at with those because some of those could be a disaster as well. So, there's different things when people say real estate. You're talking residential, commercial. How are you going to do it? Are you managing it? Are you having somebody manage it? And so you just have to be careful before you get into something like that because real estate can be considered kind of a liquid asset depending on how you're doing it. So you just need to be careful there, especially if you're in retirement.
Yeah, it's not always the home run that people think it is, right?
No, you only hear about the home runs, but you don't hear about the people
Right.
that didn't do well.
It's like going to Vegas, right? You never hear from your buddy when he comes back from Vegas that he got his clock cleaned, right?
Exactly.
So
Exactly.
because home prices actually across the country are almost identical to what they were about 10 years ago or so. So there are exceptions. There's pockets.
Yeah,
but
there's areas. Tucson, Phoenix has been a lot harder of a market than Tucson's been. Tucson hasn't. It's done okay, but it hasn't gone nearly like it has in areas like Phoenix, et cetera, or California, that sort of thing.
So again, it's a conventional wisdom that we've all heard for a long time, and it may or may not be the right fit as part of your in your overall strategy. And that's really what it comes down to: is if you've got a plan in place, then you'll have a better idea of where real estate may fall into that plan. And of course, Mark can certainly help you with that. Right, absolutely. So what about the conventional wisdom, Mark, of good debt and bad debt? And then mortgage is a good debt usually. That's the conventional wisdom. That's okay to have a mortgage.
Well, it is okay in some circumstances. Depends on the size of the mortgage and if you're in retirement or not. But the worst debt, as I've said before, is credit card debt. It's higher interest rate. It's not tax deductible, that sort of thing. But this is a hot topic in a lot of cases when somebody should they have a mortgage in retirement. And I can argue it either way. It comes down to peace of mind. And, some of my clients have no debt and have no mortgage in retirement, and that's fine. And some people do carry a mortgage and they have the interest deduction that they can take. But we just have to create the cash flow to keep that mortgage payment in retirement going. And so it just comes down to that, making sure we can work out those numbers. So, if you are going to have debt, mortgage debt probably is the best debt that you can have versus like credit card debt or something like that.
Yeah, obviously it's a necessary evil for all of us, right? We have to have, well, in most cases, we have to have a mortgage, unless you're lucky enough to be able to just pay cash for a home. But there's just a lot of folks out there who think it's advantageous to keep that mortgage when maybe it's part of a better strategy to remove it sooner. So again, it really kind of depends on how it folds into your complete, retirement plan strategy, right?
It does, and it depends on if you are going to pay off the mortgage, where is that money coming from? Is it sitting in your checking or savings, or is the money coming out of a retirement account or 401k?
Right. Okay.
Where you're going to pay huge taxes to get it out of there. That probably doesn't make a lot of sense.
Gotcha. So again, making sure that, your overall plan is in place and that you're communicating these ideas or these things that you want to work on or do with your financial advisor, such as Mark Silverman, so that that you're taking the right steps, because we don't want to make any missteps, obviously, in those final crucial years leading up to retirement. And certainly Mark can give you a hand if you have some questions about conventional wisdoms, like real estate or like a good debt, bad debt conversation. And that's 520-333-7601, the number to call or text. Go ahead and grab your smartphone that's nearby and give him a jingle right now while you're thinking about it. 520-333-7601. Send a text or leave a message, either way, and we'll get back with you and help you in really whatever avenue that you need to get help with when it comes to planning for your retirement. Mark, another conventional wisdom is retirement is a chance to relax after an exhausting career. This one's kind of tricky because I think we all want to relax in retirement, but that's maybe not always the case, maybe?
Well, I think a lot of people have different visions of retirement. Some people want to retire completely, and then they have other stuff they're going to do, whether it be traveling, spending time with family, friends, playing sports, whatever it might be. Some people maybe might start to continue to do what they're doing, but maybe slow down and not doing it as much. What we call work optional lifestyle, working because you want to, not because you have to, or even maybe doing something totally different,
Right.
And starting a different type of career at a smaller scale. So everybody's got a different vision. Some people may never want to retire, and that's certainly nothing wrong with that. So everybody's got a different vision. What I can tell you, though, is you've got to stay active, both mind and body. You're not going to just retire and then, sit on the couch or sit on the porch the rest of your life. That's not a good type of retirement. So you've got to have a plan. Again, of what you're going to do in retirement is the key. You're not going to just retire one day and hope it all, works out. You need to actually plan and figure out what you're going to do, and if you have enough money and all these different things that are going to happen.
Right. And if sitting on the couch or the front porch and rocking chair is what you really want to do, certainly not saying there's anything wrong with that, but it would be a healthier option to know that you have some other things to keep us busy and keep us active. And let's be honest, for most of us, a lot of us do get satisfaction from some form of work. It may not be the job that you currently have now or have had for 30 years, but it's some form of work, whether it's woodworking, gardening, whatever, but there's some activity that kind of makes you feel a little bit more complete, like you've done something with your day. And these are all parts of, conventional wisdoms that you want to address and talk about and think about when you're working towards your ultimate goal of retirement and what that's going to look like. Again, the whole destination is really the destination of retirement is key, but also what you're going to do and how you're going to approach it is also key. The final piece here, Mark, for our conventional wisdoms are if your investments aren't currently doing well, then you should just try something else.
Not necessarily. It depends how you're invested. You don't just change courses for no logical reason. The last thing you want to do is, look and see what's doing bad and then change everything. You've got to really analyze those investments and see what you're in, whether it's stocks, bonds, whether you're using mutual funds or ETFs or annuities, variable fixed. There's lots of different things that you can be in, but you need to understand and make sure that you need a diversified portfolio, and the risk should match your comfort level and what your risk tolerance is, as well as what the goals that you've set out to achieve are, and having somebody look at all those sorts of things and making sure that everything's on track, and if they're not, what you need to do to get on track. And so, you've got to have a reason to change investments. You don't want to just sell something just because it's not doing well. If you do that, you're could affect the diversification. And that's the reason why we diversify, is because certain things in the portfolio will do well while others aren't. And when those things that are doing well now aren't doing well, then chances are the things that aren't doing well now will do better in the future. And that's the whole purpose of diversification.
Yeah, checks and balances, right? For example, Morningstar says on average, investors lose 2.5% of their wealth every year due to trying something else. Instinctually, we panic maybe and say, "Oh, well, then I'm going to go do something else," and then you're making basically poor buying and selling timings and things of that nature. So.
Yeah, I mean, if you look, I know Dalbars comes out with a study every year, and if you look and see what the average return of a stock mutual fund investor does versus what the actual mutual fund investor does, it's significantly lower than what the mutual fund does, and that's all comes down to human behavior, emotional decision making, and that's true with stock portfolios, bond portfolios, and you see that investors typically underperform those areas. So that's why it's important to have an advisor that's going to keep you focused on your goals and making sure that you're invested properly, then they can kind of walk you through that process rather than having you make, these knee-jerk reactions of getting in and getting out at the wrong times.
Yeah, absolutely. Well, if you have a plan that you're following, it's usually a good idea to stick with the plan and let things work that plan so that you can kind of, go follow the strategy. Or maybe you don't have a plan, or you need to get one, or, it's clear that it's obviously going the wrong direction, or you just want to get a second opinion. That's something that you can provide, right, Mark? Whether it's getting a plan, evaluating a plan, whatever the situation is.
That is true, Mark. I mean, and let's be honest, most people don't have a plan.
True.
So people that even have an advisor don't have a plan. All they've done has been sold investment or insurance products with no idea whether they're on track or not on track. And so, again, this is kind of the opportunity now. So whether you're a first-time listener to the show or you've heard me for a long time, if anything I've said makes sense or resonates with you, now this is your opportunity to come in and have a conversation with me here in my office. And I don't pawn you off on somebody else. You actually get to meet with me to go through this process we call the financial physical. And I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. Rather, we're going to discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. The financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets, and we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. And this will become the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional. I believe the only one locally here on the radio here in Tucson. And the going hourly rate to me with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We do try our best to help everyone. However, our slots do fill up quickly. So I can only guarantee a complimentary meeting to the next 10 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Here's your number, 520-333-7601, 520-333-7601. Great opportunity for Mark Silverman to find out where we stand and where we're headed in retirement and get you on the right path. But you got to take the action and reach out to him, 520-333-7601. That part's on us, is to go ahead and call Mark and or text and get on the appointment calendar, 520-333-7601, for a chance to sit down with Mark Silverman and get this comprehensive review underway, no obligation. 520-333-7601. You're listening to Saving with Silverman. We'll be right back.
Life is complicated. It's full of twists and turns and complex issues. The last things you need when planning your financial future are confusing numbers and advisors who just offer you a sales pitch. We believe there's a simpler way to invest. Your financial plan should be built on a plan that's made just for you. It's all about discovering your goals and designing a strategy that will help you get where you want to go. And don't worry, we'll track your progress along the way. Stop wandering your way through your investing life. Come in for a visit today. To schedule a visit, call or text 520-333-7601. That's 520-333-7601.
You finished school and worked hard to get your first job. You told yourself you'd save for retirement, but that old jalopy you bought when you were 16 broke down, so you bought a new one. You started to save, and soon you bought your first home. Then came pets, kids, and your world changed some more. You worked hard to provide for your family. You made sure your kids got a good education. You might be sending them to school right now, or maybe it's the grandkids' turn. And of course, you're now making sure your parents are looked after. Through the years, you lovingly sacrificed for your family. Now it's time to take care of you. Love others well by taking care of yourself. Keep listening to Saving with Silverman to discover how to build a financial plan that'll continue providing for you and the ones you love for years to come.
You're back here with us on Saving with Silverman, and we appreciate you sticking around here on the show. It's the Mark and Mark Show today. I am here with Mark Silverman, as always. Mark is a certified financial planner professional, but you know that here in the Tucson and Southern Arizona area. He is the president of Silverman and Associates, and you can give him a call or text any old time by dialing 520-333-7601. That's 520-333-7601. For a lot of people, Mark, the biggest problem with their financial planning isn't that they make the wrong decisions. It's that they often, most of us, fail to make any decision whatsoever. And we just kind of, put our head in the sand. And sometimes you just have to, as the saying goes, fish or cut bait and make a decision and move forward. Would you agree with that?
I do. A lot of people procrastinate. I mean, I can't tell you how many people have come into the office from the radio and said, wow, I've been listening for so long. I wish I would have known about the sooner or cave in sooner. But, as I say, you can't change, what's happened in the past. We can just move forward from here. So
right.
Late is better than never, right?
Yeah. Well, let's fish or cut bait with a few decisions here, and we'll talk about a few things that maybe cause that decision-making process to stall for people and cause that procrastination. So, too many decisions to make. That's the first one that kind of comes to mind, thinking about all the things that come into play in the retirement planning. Social Security, spousal benefits, on and on. When do I take it? When do I not? Blah, 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 blah. It can be overwhelming.
Absolutely. That's the perfect word. I mean, I can't tell you, people come in and they have a lot of decisions to make, and these are important decisions. Some of these decisions, could be changed, but a lot of the decisions, Social Security, if you have a pension that you're able to take, if you leave your job, you might not be able to get it back. Some of these decisions you can't change once you've made that decision. So you want to make sure you're making the best decision for you and your family. So it can be overwhelming. There's lots of decisions with negative consequences if you make the wrong decision. That's why you need somebody that knows, that can help you with all these decisions, and can prioritize it and put all these things together so that you can confidently make these decisions, knowing that you've made the best decision you possibly can with all the given information that's out there, and knowing what the pros and cons of each decision are.
Right.
So that's why it's important to have somebody look over everything, not just manage the portfolio, but look at all the stuff like you discussed: Social Security, pensions, healthcare,
insurance, tax planning,
tax planning, estate planning. There's so many different things that we do. It's not just the investment piece, which is what most advisors are focused on, is just selling investment products. It's not about that. There's more to it than that.
Yeah, so we're stalling ourselves out because there's too many decisions to make, and so we don't know even where to start. Now we're really spinning, so we turn to research. Okay, I'm a fairly educated person. I'm going to turn to some research. I'm going to read some things. I'm going to go on the internet and so on and so forth, and and now I'm on even more overload because I can find a justification for virtually anything if I really look hard enough, and that's not even that hard to justify what I'm thinking about doing, and now you're just frozen.
Exactly. What is it? paralysis by analysis.
There you go.
Is the term. It's good to do your homework. But again, you're going to hit, if you meet with 10 different advisors, you're going to hear 10 different stories. What you want to do is go with the one that's the most qualified and the one that, more importantly, the one that you feel comfortable with, that makes sense to you, that's able to answer all of your questions. If they kind of skid around questions or don't really answer certain questions, or let's say they only work with insurance products, or they only do investment products, they don't really do everything, or they're not into planning, it's probably somebody you don't want to work with. Or if you don't feel comfortable and your gut's telling you no, certainly keep interviewing other advisors. Some people say, well, I'm going to meet with 3 people. Great. But if you meet with 3 people and you don't have comfort level with with any of those 3, keep going. But you've got to make a decision at some point.
Yeah.
Because you can't just interview advisors forever unless you plan on working forever. Right. But you need help with these sorts of decisions, and you need to find somebody that's qualified that you can trust.
Yeah. Well, and it's a great point that as we're talking about, when it's time to stop letting the decision-making process stall us out and not take any action here with Mark Silverman, is that you've got to get over some of the general confusion that happens. Do a little bit of research, and then do a little bit of homework and interview advisors and so on and so forth, as Mark just mentioned. And then you've got to make some action and take some action, because it is tough, but the longer you wait, the harder that road is going to be to travel. Mark can certainly help you out there. 520-333-7601. He is a certified financial planner professional. Has definitely a great resource for you to reach out to here in the Southern Arizona area. 520-333-7601. Call it or text anytime. Don't have to wait for the show to be over. Mark, back to the decision-making process and stalling out here. A lot of us just don't do well with math or even talking about money. That's a topic that just kind of, makes us ill.
Yeah, people do get confused, and it can be confusing. Again, you probably want to work with someone who's willing to explain things to you so you can understand them. If they're throwing out a bunch of jargon that you can't understand, that doesn't do you any good. If you're going to be meeting with somebody, vet them out and do your homework first to make sure they're qualified. They shouldn't have to be trying to impress you. They know what they're talking about beforehand. You should already have vetted them out for those sorts of things, making sure they're qualified. But again, they should be speaking your language, explaining everything to you that you can understand it, and explain to you what you need to know and how things work. And if you don't have that type of understanding, it's like anything. If you don't understand it, don't do it.
I think sometimes people equate the money conversation and where we stand the same as we equate our health conversations. And I know that that's part of how you talk about things with your offer, but it is very similar. Like I had a major surgery a few years ago, and going in and getting looked at and talking to the doctor is terrifying because we don't want to know the answer. We feel as though that something's not right, and we just don't want to know the answer, so we don't go see them. And the same thing happens when I think we're dealing with money. We know maybe that we're not where we want to be, or that the information is not going to be exactly what we wanted to hear, so we procrastinate, put it off, and then, hope for the best. And that, of course, that is always the worst decision. And then on top of that, you could run into a life event, like I just mentioned, like a major illness or something, or loss of a job or divorce or death or any number of things. Now you're really compounding the situation because you've chosen to put your head in the sand.
Yeah, and I agree with you. I do see that quite often. People really need to, they feel that ignoring the situation might make things better, which we all know is not necessarily the case. And if you can make a better decision knowing what you got versus just ignoring it until it gets worse, you're just compounding that problem. And so really understanding where you are, because things are going to change. So you just want to make the best decision you can with the information we have now. And that as things change, you want to adjust those based on the new information that comes in. And so if you can anticipate, what might be happening, or you think what might be happening, you might be totally wrong and things might go a different direction. But at least you made the best decision with what you know now, and you're able to adjust as things change. But if you can anticipate that there's going to be a change, you're probably going to be better off, because nothing stays the same, and I think we all know that.
Yeah. Well, the first piece of coaching that I think anybody needs to hear is to take some action and do something, and we do that every week. So we'll coach folks to say, let's go ahead and get this process of decision-making underway, and how does your specific process, Mark, make this easier?
So again, whether you're a first-time listener to this show or you're one of the listeners that have heard me for a long time, if anything I've said makes sense, resonates with you, this is now your opportunity to come in and have a conversation with me in my office to go through the process we call the financial physical. Don't procrastinate. And I can assure you, I will not be trying to sell you investment or insurance products. This is totally different than what you're hearing from other people on the radio, because I hear those same shows when I'm driving around on the weekend as well. I repeat, this is not a sales meeting. Rather, we're going to discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets, and we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. And this will become the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware by now, I am a certified financial planner professional, and I believe the only one locally here on the radio. And the going hourly rate to me with a CFP, such as myself, can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We do try our best to help everyone. However, our slots do fill out quickly. So I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. That is your number to call or text right now. 520-333-7601 to get on the calendar of Mark Silverman to come in, sit down, have a conversation about your unique, specific situation, and and fish or cut bait. Just get this process going. It's not as painful as we all tend to think it is. Once we get over that initial hurdle of reaching out to Mark and getting the process started, it gets a whole lot easier, and it's certainly better to get this information sooner than later. So reach out to Mark right now. Go ahead and be one of the next few callers that get to come in for a complimentary review with Mark Silverman. 520-333-7601. 520-333-7601. Do that, call, leave your information. Hardest part's over. 520-333-7601. Call or text Mark Silverman of Silverman and Associates right now. And we'll be back with more on the show just after this. Don't go anywhere.
Planning for retirement shouldn't be a mystery. So why is it so easy to get bogged down with financial terms and advisors who try to offer you a sales pitch? At Silverman and Associates, Mark Silverman and his team take pride in looking after their clients' best interests. Schedule a complimentary review of your situation. Call or text 520-333-7601. That's 520-333-7601.
Picture this. Your financial statements have come in the mail. What's going through your head as you open them up? Maybe all that financial jargon is flustering. Maybe the numbers are confusing, or maybe those red arrows are leaving you in a funk. Don't base your future on a monthly letter. Keep listening to Saving with Silverman. Learn what true financial planning really looks like.
Well, you're back here with us on Saving with Silverman. Mark Silverman along with me today, Mark Killian, your host. Certainly appreciate you tuning into the show each and every week and getting some valuable information from Mark, who is the president of Silverman and Associates, as well as being a certified financial planner professional right here. And he's a homebody too. He's a homegrown fella here, right here in Tucson and the southern Arizona area. And you can reach out to Mark by calling or texting 520-333-7601. Again, 520-333-7601. You can also go to his website, savingwithsilverman.com, get some more information, or send him an email or contact them that way as well. And I mentioned, Mark, that you were a kind of a hometown guy. You're from the area, but I know that you like to take road trips, right? We all do. We all like to go places. And I know that you go all around the state and to Nevada and California and all sorts of stuff, right?
Sure.
Yeah. You like to go occasionally, right? Yeah, I know you like to go out and check out music and things of that nature. So when you go on a road trip, there's usually, at least for some of us, there's usually a checklist of things that we want to make sure we didn't forget, whether we're driving to a concert or whatever. If it's an outdoor event, we maybe want to make sure we've got some chairs or the tickets or a cooler or whatever the case might be. And also, where the heck are we going? So in retirement, the same kind of thing can apply. So we'll have a little fun here with the analogy of a road trip versus retirement. Because as you know, statistics even say as well, that more people spend more time planning a vacation than they do their actual retirement. So the first thing to correlate these two would be decide where you're going to go. And in this case, it'd be retirement.
Sure. So, whether you're already retired or you're planning on retiring at a certain age, what things do you need to do to make sure that you're going to have that type of retirement and be able to stay retired? Have enough money to last you and your spouse's life expectancy and cover all the expenses that might come along your way. Things that you want to pay for and maybe you don't want to pay for, such as healthcare that you might get forced into paying for. And so, it's really understanding and having a plan or a map, as you call it, to determine here's where you are, here's where you want to be, what's the best way to do that, and making sure that's even possible. So again, I kind of hear what you're saying as far as a lot of people don't spend a lot of time planning their retirement, more so planning a trip. Maybe that's more exciting, but this is obviously more crucial, at least in my opinion.
Yeah.
And so it's really understanding here's where you are. And if you're already retired, I'd say it's just as important to make sure that you stay retired and maintain your lifestyle throughout that retirement. And we've been able to do some plans for people who've already been retired and show them, hey, you're in good shape, or hey, you're not in good shape, and here's what the pitfalls are and what you might experience if you continue doing the things that you're doing.
Right.
And it's having those sorts of conversations. And as I've said before, if you're going to run out of money, would you rather know now or when it happens? So that's why we do planning, and that's why it's so important. But we need to understand, assess where you are today and where you want to be in the future, and figure out what's the best strategy there.
Yeah, well, and because what I want to try to do here was just do the analogy a little bit to tie these two ideas together: the road trip versus the retirement. Which we do this quite a bit on the show here, because it's not just enough anymore just to say I want to be retired. So you really have to identify what that's going to look like, as you mentioned. What are we going to do with our time? Where do we want to travel to? How much travel is going to be in retirement? Are we going to stay where we're living? Are we going to downsize? Are we going to relocate to be closer to kids or grandkids? All of these things kind of go into that first section. So then if we're taking this same analogy of a road trip, now we've identified where we're going. Now we got to determine the route to get us there. And that's really where the retirement planning becomes incredibly crucial to help us, establish that route and then travel that route.
Right. And you have to have a route. That's
True.
the
Yeah,
most
there you go.
important thing.
Yeah.
And so some people don't even have a route. They just are planning on retiring and hope everything works out, which is not a good strategy. So yeah, again, it's just evaluating what you have, what are your income streams, what are you going to do in retirement, what's the life expectancy for you and your spouse, healthcare, is there going to be some legacy planning? Do you plan on gifting money to charity or to children, grandchildren, all of these sorts of things. How's your estate plan work? What are taxes going to look like in retirement? Is there going to be debt or not debt? All these different things that some people think about, but quite honestly, most people don't think of everything. But that's where we come in and really add value, is trying to make you aware of all these different things so you do have a plan, because things will change. And so we need to be able to figure out what the strategy is going to be. If this happens or that happens, what you're going to do. And that's why it's important that everybody has a plan, and everybody's situation is different. Yes, sometimes there's some common things that we see with somebody's situations versus others, but everybody's situation is different. People are retiring at different ages. They have different life expectancies. They have different amounts of money that they've saved, and different things that they want to do in retirement. So that's what it's about, is really having somebody that's going to take the time to put a comprehensive plan that's going to look at all these different areas so they can give you the right advice to make sure that, when you do pull the plug, or if you've already pulled the plug on retirement, that you're going to be able to do all the things that you've set out to do.
Yeah, so kind of a coach to help you along the way as well through retirement while you're on the route. I mean, if you're thinking about it in this analogy form, we've got our GPS on our phone and Google Maps and all these great devices now. But when we go the wrong direction, it tells us. It says, hey, turn around, so your nearest convenience, do a U-turn or recalculating or whatever. Well, the same kind of thing goes along with having a coach along the side of you in retirement planning to say, whoa, let's maybe not do this. Let's do this instead. Things of that nature.
Exactly. So it's about having the right advice that applies to your situation, to give you the right advice so you don't make any of these types of mistakes and you don't get hit with these surprises on things you weren't made aware of.
No, absolutely. I definitely agree with what you're saying, Mark. And, we're having a little fun here doing the analogy of a road trip in retirement with Mark Silverman of Silverman & Associates. And if you really, truly, you need to get a plan in place, you need to get a strategy, you need to get a roadmap, if you will, towards retirement and then through retirement. Well, Mark Silverman is such a great resource here in the Tucson area for that. You call him or text him, get yourself on the calendar at 520-333-7601 to get started with a complimentary review and just have a conversation and see how things are going, see where you stand, and see if it's a situation where you want to work with each other. 520-333-7601, no cost, no obligation. 520-333-7601. Back to our analogy of a road trip, Mark. I'll throw you a curveball on this one, but I know you're a big music fan like me, and when we take a road trip, a playlist of some sort is pretty important. Back in the day, we'd have our cassettes all lined up, or as time moved, you and I are about the same age, so it was cassettes for a while, and then it became CDs. And we weren't old enough to drive with 8 tracks, although I did drive a car for a while that actually still had an 8 track in it. But anyway,
I remember the 8 tracks.
Yeah. But music plays a big part of what we're going to do, what we're going to listen to. So how can we kind of correlate that a little bit into retirement planning when we're talking about the things we're going to listen to help get us to retirement?
I would probably say the people that you're going to listen to that are going to give you advice on your retirement plan. Some people, are going on the internet to things. Some people are listening to the radio, TV, maybe reading magazines. Some people are getting help from somebody at work or a neighbor or a family member, that sort of thing. And those are all well and good, but you need somebody that can look at your information and give you advice that applies specifically to you. Because again, as I said earlier, not everybody's situation is the same. And what might work for one person may not work for another. So if your neighbor's doing things a certain way and it's worked well for them, your situation might be different. Your risk tolerance might be different. So you need to have information that's going to apply to you. And even if you do have an advisor, maybe they aren't really taking the time to evaluate your situation, don't really know if you're going to achieve your goals because, again, maybe they focus too much on trying to sell you something, whether it be an annuity or a mutual fund or whatever it might be.
Right.
If they haven't taken the time to run the numbers to show you specifically with a plan exactly where you stand, then you really don't know and they don't know. So how can they give you that information? So I'd say, where are you getting that information from? In my opinion, you probably want to go with somebody who knows what they're talking about. It's not just a salesperson, but somebody that really does focus on planning and advice. And I would if it's my money, I would go with a CFP, make sure they're a certified financial planner professional above everything. That's a great way to vet advisors.
Yeah, identify the voices that you're going to let into your retirement world. Identify those voices, and it's okay, like Mark said, to get little tips and advice and things from people all around our world. We all do that. We're human. But then vet that information with a professional who's really holistic and going about it in the whole strategy and not just talking about maybe what the hot product or the hot commodity is that they need to or want to push at that particular time. Don't try to cram you into the square peg in a round hole kind of thing. So.
And here's a good little exercise. If you are working with an advisor, and I'm not saying they're doing a bad job or a good job, I don't know, but one thing to do is ask if they are a CFP and see what their response is.
Okay.
If he or she isn't, ask them why and see what answer they give you. And there's really not a good answer because I haven't had my CFP my whole career, but I could tell you when people ask me about it, when I didn't have it, it made me uncomfortable, and that's something I knew that I needed. So again, I always think that if somebody asked me that question and I didn't have it, there's not a good answer, but play that little game, try that little exercise and see how that goes. with your current advisor.
Good advice from Mark Silverman here on the show. And I'll wrap this up and turn it back over to you, Mark, here quickly for a final wrap up. But, we're talking about the road trip and retirement. And a lot of us, when we're on a road trip, want to use cruise control. And cruise control is a great thing, right? You want to set it and just go. You don't have to worry about, speeding and so on and so forth. But it's not always the be all end all when we're traveling, because there's bad weather, there's heavy traffic, things can happen. And so it's nice to have some cruise control in our financial life, predictability with paychecks and steady income, things of that nature. But having that coach, that person on your side to help you tweak things and adjust things as life happens and changes, because it does, is a great piece to have. So, Mark, with that, I know that's something that you offer and can help with. It's about, the relationships and identifying what each individual client needs.
That's absolutely right. So, a lot of people just put their money away and don't really look at their investments. And not to say that you want to micromanage and be making changes every day, but you should be at least rebalancing. And that's one of the things a good advisor is going to do is rebalance your portfolio on a regular basis, and also make adjustments to that portfolio based on your risk tolerance and where you are in relation to retirement. You might be a little bit more aggressive now, and as you're getting close to retirement, making those tweaks like you mentioned to modify your, that your risk is a little more conservative now, and maybe making those changes. And then once you do become retired, I should say, turning those assets into income streams and how you're going to make that work while still giving you some growth to keep up with inflation and all the other things that are going to happen. But that's what a good advisor is going to do for you, is going to have an ongoing relationship and making those changes for you on an ongoing basis.
And if they'd like to reach out to you today to get started working with a CFP such as yourself, what's that going to look like?
Sure, Mark. So, we call it the financial physical. So just like you get a second opinion on your health, why wouldn't you get a second opinion on your wealth? So again, whether you're do-it-yourself or already working with someone, this is now your chance to go through this process that we again call the financial physical. Do you know what you're paying for your investments? If you're still working, are you on track to have the type of retirement you've always envisioned? Or if you're already retired, do you know if you or your spouse are at risk of running out of money while trying to maintain your current lifestyle? I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. This is something totally different than everybody else that's here on the radio. In this initial meeting, we'll address issues of importance to you, provide an overall view of your situation, and give you some general advice on what needs to be completed. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware by now, I am a certified financial planner professional, and I believe the only local one here on the radio. And the going hourly rate to me with a CFP, such as myself, can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. Just as you want to reach a healthy life from a physical standpoint, you also want to reach and maintain great financial health. So our financial physical is just what the doctor ordered. We do try our best to help everybody. However, our slots do fill up quickly. So I can only guarantee a complimentary meeting to the next 7 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Okay, grab your phone and be one of the next 7 callers or texters right now. 520-333-7601. 520-333-7601. Go ahead and stop what you're doing and grab the phone and call or text Mark right now. You can procrastinate and say you'll get to it later, but you know you probably won't. We're all that way. So go ahead and give that call right now. 520-333-7601. If you're driving alongside of the road, please be safe and pull over, but call or text 520-333-7601 to talk with Mark Silverman of Silverman and Associates and get started with a financial plan today. Get started down the right path with Mark. He is a certified financial planner professional and available to you here in the Tucson and Southern Arizona area by simply calling or texting 520-333-7601. You're listening to Saving with Silverman. We'll be right back.
Mark Silverman is a lifelong Arizonan, and his firm is based right here in Tucson. When you come in for a visit, you can expect someone who's familiar with your community. At Silverman & Associates, Our relationship with you is most important to us. We want to build you a financial plan that's unique to your goals. No generic products, no corporate red tape, just friendly folks looking to give you a comprehensive approach to retirement planning. Come in for a visit today and let us help you build a meaningful retirement. Call or text 520-333-7601. That's 520-333-7601.
At Silverman & Associates, we understand that life can be expensive. There are bills to pay, and you might have loved ones you want to look after. With all those extra expenses, it's easy to neglect your own financial health. We want to make sure you'll be well cared for when the time comes. Keep listening to Saving with Silverman.
Well, we're cruising down the home stretch here on Saving with Silverman. Thank you so much for staying tuned into the show today. We certainly appreciate your time here as we talk about the worlds of retirement and finance with Mark Silverman, president of Silverman & Associates. Mark's a CFP, that's a certified financial planner professional here in the Tucson and southern Arizona areas. And Mark can give you a hand if you call him or text him. Reach out to him, get yourself on the calendar, come in and talk about your unique situation. 520-333-7601. And don't forget, you can always go to the website for more tools and resources and information. It's a great website, savingwithsilverman.com. If you have questions, you can also submit a question there, which is what we're going to talk about here in just a second. We're going to dive into the mailbag. But if you'd like to submit one, go to Mark's website, savingwithsilverman.com. And send yourself a message in, and we'll take the best ones throughout the week. And, of course, Mark will get back with you on all questions, but you have to reach out, 520-333-7601 or savingwithsilverman.com. So the mailbag, Mark, our first question this week is from Jeff in Vail. And Jeff says, hey, Mark, I would like to retire in 5 years when I turn 55. Is this a bad idea? It's kind of vague there, Jeff.
Well, Jeff, thanks for the question. I mean, as long as you've saved enough money to last you and, if you're married, you and your spouse's life expectancy and pay for all the things that you want to do in retirement, it's not a bad idea at all. I'm all for it. But, the question is, can you do it? That's another question, which we would need to actually analyze your situation and look at, your income streams, whether if you do have a pension or not, Social Security. I could tell you one challenge that we do come across, because we are seeing people that want to retire prior to 60, 65, that sort of thing. And 65 is kind of the magic number when it comes to Medicare. But if you retire at 55, what's going to be the solution? Is, if you're married, is your spouse going to be working? How are we going to get you from 55 to 65 and cover healthcare costs? And so, you can go out and get your own plan, which is very limited now. I know that's all up in the air right now with all the changes that have been happening. So we don't know what's going to happen next year, for example. But that's been one of the real challenges, is to understand that and count that into your budget number of what you may need in retirement. So I'm all for it if you can do it, but you want to have a plan before you cut the cord on the job, and making sure that you've accounted for everything, including long-term care, income. You want an increasing income, because you're probably looking at inflation. If you retire at 55 and you live to 95, you're probably looking at potentially a 40-year retirement. So we just want to make sure you have enough money to do all those things that you want to do and things you're going to have to pay for your life during your life.
Well, really, really good points there, Mark. I wasn't even thinking about that. Yeah. So you're looking at least a 10-year window of potentially no health care. As Mark said, Jeff, we don't know if your spouse is going to be working or whatever the case is and covering that, but and then also a much longer retirement. So really good thoughts there. Yeah, absolutely. Well, Jeff, if you'd like to reach out to Mark and sit down and have a more in-depth conversation and discuss some of those things and really share your overall strategy or plan, and then let Mark help you develop a complete strategy and plan, 520-333-7601 is the number to call or text, 520-333-7601. Thank you so much for listening to the show, Jeff. We certainly appreciate it, and good luck to you. Our next question is from Robert, and Robert is in Green Valley. And I don't think we've had this one, or at least not for a while, Mark. Robert would like to know what your opinions are on investing in foreign currencies.
Yeah, that's a good question, Robert. It can be tricky depending on how much you know about the foreign currencies. I don't know if you're looking at trading those or if you're buying and holding, and how you're going to do it. You can make money in it, in those sorts of things, but on the other side of it, you can lose money. So it depends on your expertise. We do look at some commodities for some of our clients in their portfolios. That sometimes does come up, but it just depends on your situation. Sometimes it could be considered a kind of a hedge because it's a lot of times it's non-correlated to what the stock market may be doing. But you just have to know what you're doing. So if this is something that's new to you, I would certainly do your homework before you get involved in it. And if you do something like that, whatever money you put in, make sure it's enough that you can afford it if it goes sour. That you don't lose, your nest egg, that sort of thing. But do your homework. If you're looking at, an infomercial or something out there that's telling you to do, trading commodities or flipping houses or whatever it might be, again, you just want to make sure you're not, going in without knowing what you're doing and you're suffering a loss that you can't afford to suffer.
Yeah, I would imagine that a couple of pieces of good advice, Mark, and correct me if I'm wrong here, would be do your homework, always check with a qualified professional before you take any action, and then maybe start small. Like if he's going to dip into that, don't get too lofty.
Exactly.
Yeah,
I agree with all of that.
Yeah. All right, great question, Robert. We certainly appreciate it, and reach out to Mark for more details and more information to really dive into that a little further. Call or text 520-333-7601 to talk with Mark Silverman, certified financial planner professional. 520-333-7601. And our final question this week is from Miss Harriet in Benson. And Harriet says, Mark, my aunt died and left me some rental property that I just wasn't expecting. I've never been that interested in owning real estate like this, and I don't want to sell it because she clearly wanted me to have this. I'm kind of stuck. What do you think I should do?
Well, Harriet, it's a great question, and we talked a little bit about this earlier on in the show about rental properties. You can keep it. But if you're going to be using probably a property management company, because it sounds like you're kind of hands off with managing it, you have to keep that in mind because they are going to take a portion, and make sure you go with a reputable company that's going to do that for you. But it could provide cash flow as long as it's you have it rented with good people and that sort of thing. But if you are already retired, you always run into the risk of if it goes 6 months a year and you don't have somebody in there and you still have to pay the property taxes and insurance and all that. And if you're relying on the income that was going to be coming from that for your own personal use, that could be a challenge. So like I said, rental properties can be a tricky one. It just depends on how involved you want to be and what the situation is. I'm assuming there's no mortgage since you did inherit that. But you could also sell, if your aunt's intention was to let you have that, and maybe you could take that and do something different with it that might be more suited for you, that could provide more income for you and less worry and stress too. And hopefully she would feel strongly about you, looking out for your best interest too. So it's a great question, but with what you've told me, again, it's going to depend on more information. But if you have any questions on that, I'm happy to have a discussion with you about that.
Yeah, that's a good way of thinking about it too. As Mark mentioned, that she gave you this gift, but maybe it was really more about the gift than necessarily just the property. So probably the investment or the opportunity to do whatever
the equity.
is. Yeah,
the equity is the gift.
There you go. The best scenario, as Mark mentioned, she may be totally fine with what's best for you is what she really wanted you to do with it. So I don't know that I would beat yourself up too much that you have to hang on to the house if it's not your thing, but certainly make sure you check with a qualified professional to make sure you make the best decision and the best options for your specific situation so that you don't have any downside there. But great question. We certainly appreciate it. And Mark, for these folks or anybody else out there who would really like to come in and get started and finally take that action, what's that going to look like?
Sure. So now that I got a chance to answer a few of our listeners' questions, I'm going to go ahead and throw out a question there for everybody listening right now. So here's a simple question, and can you answer it as honestly and as objectively as possible? Aside from the happy hellos and how's the family, and aside from the occasional lunch or golf game, I get it. I'm as much friends with so many of my clients that become true friends over the many years. But I think the question has to be asked, especially in light of the stakes. Is your current financial advisor truly adding value beyond a doubt? And I'll repeat, is your current financial advisor truly adding value? It's a valid question, as a friendship or just relationship allows you not to be in a position to ask those critical questions. Are you talking about taxes? Are you talking about Social Security and income and diversification and insurance and estate planning and healthcare? Are you having those annual reviews, but hopefully it's more frequently than that? Is there detailed follow-up? Is there accountability? If you are, if all that is happening, congratulations, because you've got a great relationship, and send your financial advisor a thank you. But if you're not having that, if you're not feeling the value, if you're not having these in-depth conversations, then you owe it to yourself and really to your family to have a conversation with someone else, because if you don't, you're the one that's going to suffer. You're the one that's going to pay the cost, and it'll cost you in more ways than you'll ever know. Let us prove to you how we can help your money go further in retirement. Let us show you with our financial physical. I believe you'll be shocked at what you'll learn, and this won't cost you anything. Give us a call at 520-333-7601, 520-333-7601. That's 520-333-7601.
All right, retirees, pre-retirees, great chance, great offer from Mark Silverman. Great question, really, to ask yourself and find out where you're going to go and how you're going to get there. And Mark is a great resource to turn to here in the local area in Tucson and Southern Arizona, but you have to reach out to him by calling or texting 520-333-7601. That's 520-333-7601 to get this process started today with Mark Silverman of Silverman and Associates. Mark, as always, thank you so much for being on the show each and every week. We really appreciate your time and your wisdom.
Hey, Mark, always happy to be here. I want to thank everybody for taking time to listen. I hope you received some value. And remember, stay cool out there and drink plenty of water.
520-333-7601. You can call or text anytime, 520-333-7601. And always tune in for more of Saving with Silverman.
Silverman & Associates Wealth Management, LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities product, service, or investment strategy. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified advisor, tax professional, or attorney before implementing any strategy or recommendation discussed herein.